Microphone check and screen share check, please. Tonight's podcast dedicated to King of the Monsters, Godzilla. Little known fact, the guy who plays the chief scientist in Godzilla, King of the Monsters, is also, it's Takeshi Shimura, who is also the leader of the Seven Samurai in the legendary film, The Seven Samurai by Kurosawa. My favorite Japanese actor of all time. Toshiro Mifune is a close second, along with Shintaro Katsu. And the Hall of Fame is rounded out with Raizo Ishikawa of the Sleepy Eyes of Death. Check him out. Best ever. I want to start with just the performances from the guys today. The market got absolutely murdered today, but I want you to see what we do when the market is crashing in flames. And I want to start with Tim. As soon as I find my pen, that is. So Tim brings home 7R today. Crosses the VWAP. Gets paid. Tries the front run the SSC a little bit. Quick. Yeah, that's a quick stop in reverse. Gets paid on the SSC. Good scratch. Legitimate stop and reverse. Mucks around a little bit, doesn't matter. Gets paid huge on the one that matters. So attention to detail here means that when you just keep doing the right thing and it pays off large because you're just following the rules. Perfectly played. He was studying the range stat divided by 6 versus studying the PSAR flip during the nightly session. So one of the things that he's noticed is that when you get a PSAR flip, as we have noticed, that this is a standard risk box, one way to look at the MMRB. That's visual box trading. And then you can also take the range stat divided by 6 as a numerical computation. You can compare those two to start deciding which one is appropriate for you. And then it's a matter of fine tuning, whether you like the visual inspection or the mechanical entry or the mechanical calculation. Either way is fine. I'd look at them both. And then on the ones that you trade, you end up finding your preference. So well done to Tim. This is Griff with the CD only today, Collapsing Dragon. Correct. This was a little slow. I thought this should have been re-entered here, and that would make this a scratch. This was a good micro loss and a perfect re-entry. He identified a potential second CD off of this low here. Bring that across. Second position gets paid huge. Another quick scratch and massive retaliation. Pretty good work. When you add the The integration of the SSC and the COTA 2s, you get a slightly better performance. It nets another half of an R. I will leave that to your inspection. And that was the SSC only, was not so good on a big, massive sell-off today. So here's my brother with the Godzilla trade in Tesla on the 10-minute. Hey, I want you to start drawing that one as red when you go short. We know it's the start of the trade because it's at the start of the box, but we want to get the directionality right. And then your cover should be in green right here. So that's 13.5 R using the standard $6 risk box. Godzilla indeed. And then this is when the sniper rolls over. This was failure to execute that way. So when it rolls over, he gets the sniper reentry and then covers here. That's the advanced sniper. The trade stalled, so you just feed the baby. Didn't trade at lunch. Why would you? So about 14.5 R or something like that. Yeah. On a 10-minute chart, for crying out loud. Let's see, Luke today. Z3P exiting the dragon. Quick recovery, minus 0.4. Tries a Z3 breakdown again, minus 0.6. This would have been tempting on the COTA 2, but he gets the COTA 2 here anyway. The easy flow of the dragon, Godzilla indeed, gives him the entry. Hey, if you can, make those a little bigger. Old man eyes. He gets his second position here. He notes correctly that he should take this one. If it doesn't work within 3 bars, get out. So we gave back too much on 2 positions. I mean, you're better off just on one. If you're going to be that late, don't even take the second one. This is a good COTA 2 right here. That is exactly what you want. Quick reversal, smash. Third one was a possible good exit. And then the SSC, second one. This is the one he's saying he should have, and I agree. So that's 8. And if you take those 2 positions, this is probably 12. Three-minute Aussie with the WMB3 and the COTA 2. 2.2 in the usual way. Gets paid. Sticking around too long. Good reentry, 1, 2, 3. Sticking around too long. Right there. You gave back 2/3 of the gain. Sticking around too long. This was all right. Maybe we could get this, but that's all right. Not much in here in either direction. You got paid on the big one, and on the big ones, 2.2. We're stop sticking around. You know, on the WMB3 technique, you know, you end up getting like these kinds of entries, like right here. You know, there was some sell-off, and then it hit oversold and hooks up, and then the MACD ticks up, and then you buy the breakout. So you end up having a really small risk after a long downward move. If that doesn't go immediately and this starts rolling over, get out. If this works, it works right away. If it doesn't work right away, it ain't working. Get out. Like waiting longer to see, maybe this is the one that, no, get out. There's all these other times when it fails, it's going to keep coming down and giving you some more reentries down here if all the conditions are right. So you'll get the big move when it happens, but it must happen right away. Otherwise, to review, get out. Two things matter: trade location and volatility posture. We're looking for extremes of outperformance, underperformance, or quiet fence sitting. And in that's on trade location. And on volatility, we want extraordinary volatility that's in play now. It's volatile in either way, or it's so quiet, it's abnormally quiet, like a compressed spring. So the combination of location and volatility posture gives you sniper setups. The combination of those two things equals critical state, equals small current range and a big breakout. That's what we want. So this was the Godzilla from yesterday, and it gave us a nice gain in PayPal when the rest of the market was suffering. Today, here's just a simple message to you. I mean, honest, I can't make it clearer than this so far. So this was a daily, this is the daily move expressed in here. For reasons that pertain to math, this is a barbecue trade setup. I'm not going to go into the details, but when it breaks below, you are on it like a fat kid on cake. And you should be around 15R with a $6 risk on a single position. And there were other places in here where you could get as many as 4 additional positions. You might have taken an exit here or in here, but reentry. But 15R is the minimum you should be getting out of that barbecue move in Tesla. And we highlighted that last night. Here was a HCA. HCA was the number 2 Godzilla yesterday. This was yesterday's range. It gapped down, sold off sharply, and guess what that leads you to? If you said WMB3 and upticks, you'd be right, because you get this entry to here, this entry to here, that entry, scratch, micro loss, crush. 5 out of 6 winning trades. And this was on a day when the market got smoked. And if you take a look at the S&P 500 components, and we're just setting it up for the auto framer and the squeeze, notice that HCA, which was the number 1 Godzilla yesterday, is the only one in the whole stack that had a positive move today. It was up 2%. Do you think HCA might do something good tomorrow? I don't know. But it was the number 1 Godzilla yesterday. And that's what a move out of the critical state looks like. While the market was getting smashed, HCA just did that. S&P 500 component member. It is small enough as a member of the, it's just one of the 500 symbols. So it can actually move separate from the broad market itself. It has, this was a lot of company people buying this thing while it's on a fire sale. Godzilla. This is just a quick extract of the prototype sniper report that features the Godzilla. So these are the ones in the S&P 500, HCA, still in first place, getting smashed on the long-term, medium-term, short-term index in the bottom 2%, and is almost 5 sigma of volatility. Netflix, Godzilla, Facebook, Allgene, Disney, PayPal, Salesforce, Google, all Godzilla trades. Depth from the deep and extremely volatile. These are the ones that are greater than 1 sigma, or I'm sorry, greater than 1 sigma on the volatility. Now, the catfish is also a bottom feeder, but he has less than 0 on his volatility. So these are quiet bottom feeders, just monkeying around. Whereas Godzilla is in a rage, bottom feeder coming up out of the depths, enraged. And the barbecue, these are the ones that are in the middle of their trading range. And either extremely volatile, already in play, or extremely quiet. Ideally, you want something that's in the middle of all of those, but as the market is so volatile, I had to settle for just the intermediate term, middle location, plus either extreme volatility, large or small. So you ought to take a snapshot of that or go download it from Patreon. That is money. You know, in the TC 2000 bundle, if I'm just going, just for the heck of it, there are some extraordinary movers in here. Let me see if I can find one. Oh, that's exchange traded funds. Sorry. Oh yeah, in the TC 2000, you can scan 3,000 ETFs in a minute, or in a second, I should say. So there's Netflix. Getting smashed at the bottom of his range, of his long-term range. At the bottom of his intermediate term. At the bottom of his short term. And his volatility is large. Newmont Mining, also in a great position. He's in the middle of his weekly range, ready to break out at an extreme and an extreme on the daily. On this 10-minute, I should say. we'll take a look at, I'm just going to look at our standard boot camp. PayPal is in great shape. I mean, I love that setup right there. This is either going to start rebounding from up out of the depths, or like Godzilla is just going to collapse and crush Tokyo. He comes in raging up or crushing down. So PayPal, Alcoa in the same kind of location. Ready to break out in either direction. He's got a strong move from here to the top of his 10-day range. That's his target up there around 91. So these things frame themselves in TC 2000. Saves you an awful lot of work. So we've got 5 standard sniper patterns that we like. And we have 5 standard patterns. So 5 standard setups in the sniper, 5 standard patterns to trade them from the foundations course. They're fractal and pretty straightforward. All right, back to our program here. Yeah, 13 reward to risk ratio will get your attention. Well, all right, so this is the S&P on the daily market health check. So today it gapped down to here and then just sold off and got smashed all the way to here. New 10-day low, new 30-day low. Broke through the collapsing dragon from earlier. So this is all fresh and painful. Here's the Z3 line. Here's the daily range. This is off 14% from the swing high. Remember back in the day when summer turned to fall and then broke the PSAR and the PSAR flip? And when this rolls over and that rolls over, you have an owl entry right here. And then you have a collapsing dragon right there. And this long, steady PSAR. You got to read the tracks, read the signs. There's the S&P down 3%. The Russell 3.2. The Qs were the worst at 3.7. Emerging markets in the Dow were down 2.2 and 2.3. Treasuries, the only thing in the green, up 1% at 122. What was better than the S&P today? We wonder. Finance and wheat and precious, 2.6. Lumber down only 2%. Simon Property Group, Mexico, marijuana, staples, materials, oil exploration down 1%. Energy in the green at 0.14. Food, agriculture up 0.27. Blended commodities 1.37. VIX, oil, and BOCT between 1.6 and 6.25. Individual companies. Devon Energy, 0.4. Alcoa down 0.6. And that's all she wrote. It's these alternates, and really just energy and ag. Now the Trail of Tears. I mean, good targets on the way down. Tech. Brazil, 4.4. Blockchain, lithium, Bitcoin, clean energy, FANGs. Consumer discretionary, 5%. Blended crypto, 5.25. Moonshots, 5.33. Biotech, Arc Genomics, 6%. Global Future of Finance seems to be bleeding from the ears, 6.5. Arc Innovation, 6.75. Ethereum, 7.5. Tesla gets smashed 12% out of the barbecue framework. We mentioned this last night that Tesla, oddly enough, was a barbecue. Meaning he was sitting right square in the middle of a comfort zone between very high and very low. He was cruising along in the nice middle of his comfort zone and was quiet on volatility. So you play the breakout in either direction. It opened up a little bit and then instantly sold off 12% and never looked back. How could you know? You can't know, but you can trade. That's exactly what the barbecue trade does. One day surprise. Could have just as easily done that. In which case the barbecue tells you, okay. All right, this should strike you as remarkable. We're in bearish normal conditions. Dudes, we haven't even hit bearish volatile yet. Look at this. And we haven't hit bearish volatile yet, but it's close. How good was this early warning? Good. That's how good it was. It was good. Good enough. These are all kind of staples in healthcare inside here. Johnson & Johnson, Procter, Walmart, Merck, and Coca-Cola. Meanwhile, Netflix, PayPal, Facebook, Nvidia, Godzilla, plus Tesla. Everything is getting smashed. Everything is sold off hard. Only the defensive plays are doing anything. Buyer's market, but these are the ones that should be first for shorting when if they're failing because of that extreme reward to risk ratio. Zero things are squeezed today. There's you divide this by 6, or divide this by 4, I should say. The minimum range of the last 30 days, $24. Divide that by 4, you get $6 as a potential. If you divide the range stat by 6, you get about $12 as the risk box, but that's the one I like right there. Yep. Yeah, the auto framer and the sniper and the auto framer. This is giving you essentially this column here is giving you that reward to risk for the test of the 10-day high with the using the daily range. This one is measuring the a range stat move against a range stat move against the range risk for breakouts. And this is giving you the range stat divided by 6 if you're using that for the intraday move. Very few things did any good today. There's Devon Energy, the energy sector, blended commodities and agriculture, oil itself, treasuries, and the VIX. You can make a living on this table. You can. I mean, I want you to think of this like a newspaper or a salad bar. You don't have to read everything, and you don't have to eat everything to make a living. Find what you need. Take what you want. And use it. That's all you got to do. Massive amount of winter. Everything except treasuries and oil. That's the tail of the tape. Johnson & Johnson's about it. Maybe even a little Pfizer. Or just Godzilla. The Godzilla trade is ideally suited for this market. This is the one that ought to, we're not in bearish volatile, but if that breaks, collapsing dragon. Now, I will notice that the 10 period, the slope of the 10 period regression line is at 2.5. The 30 is already 1 below, and the 90 has rolled over. So that's a pretty extreme reading. The last time it was like that in the last 180 days was never. It was never like that in the last 180 days. The closest it was here. And you should notice this. The last time the 30 was down around 2 and the 10 was painful was right about here. It had put in a double bottom, followed by a strong move from about 420 to 460, which is about a 10% move. It couldn't make a new high, which makes this really suspect and downward. But this is kind of the condition that is either going to collapse or there's a tactical rebound. And that's why the Godzilla trade is so good, because he's smashed on the long-term, mid-term, and short-term, and is very volatile. So it's going to be a big breakout from wherever it ended up. And so you got to be prepared for either contingency. These sniper trades from critical states, you don't know which way the panicked animal is going to run. So you are prepared to target him here if he breaks that way, or target him here if he's breaking that way. It's like if you're watching a person on the train tracks and there's a train coming and they're sitting and they're standing right there. If they don't move, they're going to get crushed. That's the least probable event. So they're either going to move left or right. Do you know which way they're going to go? No, you don't. So that way, if he's long, that way, if he's short. So all we do is we just take that and rotate it 90 degrees. There's a big move in either direction to get off the train tracks from the oncoming train. So don't get hung up on which direction it goes. You just know there's going to be, in a critical state, when it has collapsed into this critical state, big moves after it breaks out of the tight compression. Keep that in mind. Keep your wits. I think that's everything I want to say. Well, look at that HCA trade again in the auto framer. That was the best Godzilla. Yep. Yep, he's ready to break out. That's HCA. I'm going to look at Netflix. Yeah. So the breakout from that yellow box is the breakout from his daily range. So that's either going to break down sharply or it's going to rebound to the 10-day high, or at least to the top of the before the gap. My brother asked me, is the sniper setup available on the TC2000? It's in the TC2000 bundle. You mean this one that I'm looking at right now there, Bill? Or the 3 time frames? Yeah, I'll send you both of those. I've put them both in the TC2000 bundle. That seems fair. And this is the Netflix on the 3 time frame setup. You know, you can see how on the long term this thing is crushed way down here. Yeah, and then on the daily, it's way at the bottom. And then this is your 10-minute. This is your 10-minute chart here. And you can see even today, Netflix was a Godzilla yesterday, and it sold off sharply as well. It went from a breakdown of 209 to 200. So that was a 5% move, which under normal conditions would be quite a move. Just compared to Tesla, it's not that, wasn't that big. It was only 5%. All right, that's everything I got for today. We'll get this published and posted. There was a good write-up of Sniper trading, the philosophy and the mentality on the Patreon. Let me point it out to you. just for those of you keeping score at home. We use sniper trading techniques to routinely trade low risk ideas for targets in critical states with a professional state of mind and a rules-based system at a manageable level of professional risk. A low-risk idea is a reliable, frequent, robust trade frame where we can reasonably get a good chance at a profit that's 2 to 3 times larger than our initial manageable risk in any market in either direction. So a critical state is an example of a low-risk idea, and it's what we're looking for in our targets. A critical state is defined as a moment when we can reasonably expect the following: a higher probability in the near term of a larger than normal move in either direction in a shorter period of time with a manageable risk, with an instantly identifiable, simple, robust pattern. Our sniper training will use the 4 fundamentals of rifle marksmanship, which are taught at the elite U.S. Army Sniper School. Mastery of these fundamentals and a relentless performance to standard are what produces the deadliest and most effective snipers in the world in defense of the nation. And we'll be following those same principles of instruction in order to teach you how to find, frame, and trade specific trading targets that meet our criteria for a low-risk idea. First, steady position. You got to find targets in a critical state that are more likely to make a large sudden move. Then you adopt a sight picture, which uses the proper standard pattern for that trade the same way every time. Then breath control. You're going to use a relentless focus on the task at hand with your trader's mind to screen out distractions. And then trigger squeeze. With steady rearward pressure, you execute the trade according to the rules the same way every time. And we'll use the principles of plan, prepare, execute, and assess to systematically ensure that we're doing the right things at the right time with the right tools in order to survive, then thrive in the challenging, dynamic, and sometimes chaotic environment of the trading market. You guys can read that. Our trading targets are large liquid stocks like those in the large cap S&P 100 or the 500 or the Dow 30 Industrials, or large liquid volatile exchange traded funds, and currencies that feature moments of significant volatility that allow us to trade the seemingly sudden large moves in a low-risk professional manner. Our job is not to be surprised. Our reliable patterns occur in targets when they pause momentarily and enter a critical state. These critical states occur in several routine situations all the time, and I showed you 3 of them tonight: the catfish, Godzilla, barbecue. The other 2 are Humpty Dumpty and fireworks. So you're going to learn to develop and trade with the trader's mind, which is those features right there: calm, alert, prepared, balanced, adaptive, disciplined, systematic, relentless, focused, and professional. Every one of those means something. Now, it takes 4 things to have a trade: time, will, pattern, and money. Time. There's enough time left in the day for a reasonable move to unfold. Will. You are trading with the trader's mind. Pattern. You have identified correctly the pattern to set up and apply. And then money. You have risk capital available and you've applied the standard risk per trade. At any given time in a large population of targets, it's normal to find many targets in each of our favorite patterns. And we want to specialize in the patterns that we personally are best at trading and with many opportunities. When you have a lot of opportunities in your favorite patterns, you lower your anxiety because you know that more opportunities are coming and you don't have to be perfect on any individual trade. No single trade is ever allowed to have a catastrophic impact on our trading account. We're like a master mason, consistently building a solid wall out of standard bricks, one at a time. These ideas, concepts, systems, and setups that you'll learn are being used every day around the world by a select group of professional traders to earn a good living by adhering to these foundational principles, which for the first time are going to be taught outside of the realm of professional traders. These lessons reflect over 100,000 man hours of professional research, development, and application. And they're informed by over 30 years of delivering world-class training and education to professional traders in banks, hedge funds, mutual funds, retirement funds, and independent registered traders and investment advisors and CTAs. So yeah, that. This is what that course is going to look like. Questions and answers, introductions and defining some terms that I just read to you, how to set up your charts, how to read the indicators, and then the 3 patterns, SSC, collapsing dragon, WMB3, and then the sniper himself. I talked to you for a moment. Oops. Oh, I guess I should have screen shared that, huh? I guess I'll record all that again. Sorry about that. Hey, I did want to show you one thing while we're still here. Let me know when you see the live trading Kansas City, Bill. Yeah. So the live trading Kansas City 2019 course is up. I normally sell that for $2,000. I will again, but I got an early bird special on it because it's the first one of the professional trading workshops that we've made available to the public. So that's on sale for $497. I'm not sure how long the early bird will go, probably till 1 June. It starts off with a due diligence and secret sauce lesson. And then every one of these little numbered videos is a trade frame and a debrief and a live trade case study where we're trading live on the big screen and talking through different patterns. And then there was a lunchtime reset and a master class on Tesla. And then the Kansas City 2019 research presentations, you're going to see throughout all of those about a dozen professional traders who are presenting their research presentations that have been peer reviewed. And then I give them a counseling session, a coaching session where we look to get more. You're going to see some of those people again as niche traders, because you got Kim Anderson, Matt Richardson, Glenn Osborne, Bill Scheit, Mike Dwyer, all professional traders, all professional money managers. And they are presenting how they develop their systems, what the rule sets are, and how it all fits together. At the end of this thing, this last little section is you can download their slides so you can follow along and see that. Mike Dwyer and Matt Richardson, I mean, I'm telling you, any one of them is worth the price of admission. Mike Dwyer's presentation was amazing. Kim Anderson's was amazing. Matt Richardson is basically using that system in his RIA program. He left the world of corporate tax law and is now a full-time money manager professionally. It takes $1 million to get into his managed accounts. And he's using the systems that he built and presented and got bulletproof coaching on in Kansas City. So I'm really impressed with his work. I'm really proud of his work. So that's the live trading Kansas City 2019 workshop. You can see the link on Patreon for the 75% off early bird discount. I'm nuts for letting it go for $500, but I want to get it moving. All right, that's everything I got for tonight. We'll see you tomorrow.